Hello and welcome to the ASID Interior Design Billing Index First Quarter Report press conference. Welcome to our attendees.
The broadcast is now starting. All attendees are in listen-only mode.
Hello and welcome to the ASID Interior Design Billings Index First Quarter 2016 report and press conference. We're happy to have you with us today as we discuss the state of the industry over the past quarter and the results of our Interior Design Billing Index. For the past 3 months, we have some interesting results to share, and we'll get to those in a minute. First, I want to just welcome our attendees and let you know that I am David Krantz, the Vice President of Research and Knowledge Management at ASID. With me on the line today is Dr. Jack Kleinhens of Kleinhens and Associates, ASID's chief economist, if you will, and the leader of our Billings Index. We take research seriously, and our research on the industry, on the economic performance of the industry, is part of a bigger picture of the research agenda for our association on behalf of the industry. We're constantly looking at the latest trends. We're looking at the impact of design on the human experience. We're looking at how our industry affects the other industries related to it, the jobs availability. We'll talk about jobs today. We are a resource for any of the media that are on the line today. We are happy to help you check data points, to help provide any quotes or experts that you need to reach through the American Society of Interior Designers, including myself and Dr. Kleinhens. We understand the importance of deadlines, and we're happy to be here for you as a resource. So keep us in mind as you're writing about the index and any other research projects or data on the industry. So all of that said, I think that we can get into the session today. I'm going to hand off the floor to Dr. Kleinhens, who will discuss the latest results. Then we will talk about our bonus question, which we've been asking every month now for the past year. We've got some interesting results there. And then we'll be taking your questions at the end of the session, so please think about any questions you might have for myself or Dr. Kleinhens. And with that, I'll pass off the floor. Dr. Kleinhens, you want to take over?
Thanks, David, and appreciate having the opportunity to speak with you all today. Just as a matter of kind of a reminder, the American Society of Interior Designers launched this Business Performance Index, which is now known as the IDBI Index, and it's conducted monthly. We try to observe and get perspective on current and future business. We have firms that are offering interior design services across the board in many ways, and they are a very important part of the underlying data that we're going to provide you in a few minutes or over the next few minutes. I have also included, we include on a quarterly basis other data, other indicators that provide perspective on the interior design industry. So let's begin with the very first chart. This is a track of the last 12 months for the index. Notice we've got the moving average, which kind of gives us help because the data does fluctuate from month to month, and by looking at it over a 3-month moving average, we are able to get a little bit better perspective in terms of its trend. And you can see that in March it was better than in February. We're actually seeing some acceleration in business, even though we had a very weak January. The index was at 60.8, which is certainly a positive upswing from the close of the fourth quarter, which was at 45.3. And the 3-month moving average, of course, shows that we've gone through that dip. When you look at the new project inquiry rate, that's also shown as an upswing from the earlier in the year 2016 and from late 2015. That's really an indication of what might be in the pipeline. That's a good way to think about it. So as you can see throughout the year, we stayed fairly ahead of the important level of 50, or the score of 50, which means that throughout most of 2016, and we talked about this last time, the interior design industry was in an expansionary mode. So if we go on to the next slide, we're going to look at how we've done, how interior design have done based on size. And you can see that all sizes enjoyed a positive billing upturn in the first quarter, with the exception of those that are between 10 and 24. So the green line shows those firms 10 to 24. Again, largely because of the data and the way that we need to compile it. You know, a lot of fluctuations, but still, if you can see through the data, we're still in a very positive viewpoint in terms of above 50 throughout most of the last 12 months, with the exception of the firms between 10 and 24. We'll go on to the next slide. And this gives us a little indication about how we are doing in terms of our regions. As you know, the U.S. economy is not all one economy, and regional analysis is very important. There are some parts of the United States that are way ahead of other regions, and others are falling behind. Certainly with the energy crisis, certain parts of the U.S. that was very dependent on oil, gasoline, oil shale, are having a little bit more difficult time, and so their spending would be probably different, or you expect it to be somewhat different. And then, of course, there are some parts of the United States that have, you know, sort of secularly changed because of the way we're doing business these days. Certainly, we were more heavily dependent on manufacturing, you know, 20, 30 years ago, and that was really where a lot of the Midwest firms were located in manufacturing. And so, not surprising that there's a little bit fall behind, but yet in this same graph we're seeing that the Midwest did pick up from a fall off of in late fourth quarter. But otherwise, this is a good indication that things are progressing and we're moving in the right direction. And if we go to the next slide. Now, we customarily provide these other indicators just as a way to kind of get a bearing on how things might be perceived by outside of the industry. We like to use the Dodge Momentum Index. It gives us an indication of what's going on in terms of non-residential building projects, what's planned, and tends to give us a leading indication of how things might be performing. You can see we kind of leveled off in January and dipped a little bit between February and March. Recent data that just came out last Friday, I would like to note that actually it stabilized right in about where it left off, so that negative fall off that occurred in March is probably just staying the same for April. So that's an indication of non-residential. Then we look at the conference board, and the reason why I like to put this one in, and we've been using this, it gives an indication of how consumers are just thinking about spending in general and expectations about the future. As you can see, from February to March, it was a positive uplift. Unfortunately, April, which data came out on April 29th, we saw a trend downward actually, which could pose some concern. But I also believe that it's kind of a reaction to some of the issues that we were seeing in the first quarter, and certainly it's noted in the many of the releases, especially in the consumer sentiment and consumer confidence, that maybe the election is starting to play a little bit of hesitancy on the consumer part. But nevertheless, you know, we're still in a fairly higher level of consumer confidence and sentiment. Then finally, the ASID index, we're in the process of pulling together the April data, and we won't have that out for, you know, another couple weeks or so, or maybe a little bit later next week. But nevertheless, you can see that our industry fell off a little bit looking out over the next 6 months. And again, I think that's kind of a reaction to sort of the overall weakness that we saw in the U.S. economy that began really late December and went right through until early March. And with those comments, David, I'll conclude until we go into a Q&A session.
All right, thank you very much, Jack. I'm going to then talk about some of the questions that we asked in our bonus question section of our survey. Again, we survey we survey approximately 300 interior designers in our network and ask them not only about the performance of their businesses, how they're doing this month versus last, but we also take the opportunity to ask them some questions that we here at ASID think are interesting. And as you can see on the screen, we chose to ask them, this was for the February Billings Index bonus question, we asked how many hours per week did you work on average over the past year? And this is actually tied into additional research we're doing with our emerging professionals, that is to say our young designers who have who are just starting out all the way up to 10 years of experience. We've written a report that will be available shortly on the ASID website, which are the findings from a series of roundtables that we've conducted over the course of last year in partnership with Hayworth, where we brought together interior designers from, again, 0 to 10 years of experience from large firms in 5 different cities. That was in Washington, D.C., New York, Philadelphia, Dallas, and Chicago. And we asked them all about their careers, their work-life balance, working with their team, and we found, I think, really tremendously interesting insights about what it's like to be a new designer in a large firm and medium-sized firm in a big city. To go along with that, of course, we heard that work-life balance and work-life integration are challenges, as they are, I think, for everyone. But for the young designers, we got to hear about their lives and what they're doing to cope with the demands of work and other responsibilities outside of work. We wanted to hear from folks, how busy are you? We heard that a lot of people are working very long hours, and those emerging professionals in the big firms are a bit different from our panel month to month, our IDBI panel, which tends to be a bit older, actually quite a bit older. They're not just emerging professionals, but it's pretty a broad structure across the industry, a broad group of individuals, and also they tend to not only be working in large and medium-sized firms, but we have plenty of sole proprietors and 2 and 3 and 4 person firms represented as well. But in any case, you can see here that that it is a hard-working group of people, of professionals, where we've got between over 40 to up to 60 hours are our largest categories in terms of respondents, and not a small group there working between 60 and 69 hours per week, which I think is a lot. So on the next slide, we can see what those numbers work out to be. So the average or the mean was 46 hours per week, but the mode, by far the most popular response, was 50 hours per week. And the range we had is from 10 to 80, and we also noticed that designers with less experience, that is typically the younger designers, although there's plenty of second careerists as well, but typically designers with less experience tend to work the longest hours, with an average of 55 hours per week for that group of 5 to 10. So I think that that's interesting, and it seems that that after an initial push in the first few years of hard work and long hours, that for those with longer years of experience, the hours per week tend to drop off a bit, and life gets perhaps a bit more comfortable. On the next slide, we can actually see, I wanted to compare that to the broader average. So I pulled up, what are some of the national averages and what does it look like? And so the ASID mean of 46.16 hours per week compares to the national average for salaried workers, and this comes from the Gallup survey that was an annual survey that was conducted. And so the average for salaried workers is 49 hours across the national economy. Now, showing part of the discrepancy may be that we have some folks who are decidedly part-time designers, and even though they're salaried, they're still working fewer hours, and people may be choosing interior design as a profession that allows for more flexibility in their personal lives. There's a lot of variation, but I thought it was interesting too to look at hourly workers at 44 hours per week on average, and then I was curious about vacation days. And you can see that nationally, Americans don't take their vacation. They get on average 15 days per year and take 11 vacation days. Now, we didn't ask about vacation days from our panelists, but I think it might be just an interesting question going forward. And with that, I think we'll move to the next slide. And related to this, to the whole business about how busy you are, we know that the economy has been picking up steam, that we've had a recovery back to pre-recession levels in the interior design industry, which is, I think everyone is thankful for, and it continues to pick up steam for last year and this year, and so hiring is hot. We are seeing here, we asked you, have you hired or do you expect to hire any additional employees in 2016? And I emphasize additional employees, so new positions, not replacing folks or churn. But and here we have 29%, approaching a third of all interior design respondents have hired or expect to hire this year, and that 29.6% wedge of the pie you see on your screen is actually up from last year, where it was 25%. So again, a marked increase from last year. Now, we asked also, what type of employee do you expect to hire? Are you looking for a designer, or are you looking for administrative support? And you can see here that 81% of the respondents who are expecting to hire are looking for designers, and 19% for additional help outside of design. How many years of experience are you hoping to hire for? This is, I think, interesting too, that if you look at the two largest slices of the pie here, 0 to 4 years experience and 5 to 7 years of experience, that really constitutes, 3/4 of the sought after employees are essentially junior, from between 0 and 7 years of experience. So I think that is interesting news and perhaps good news for the ASID student members and also our educator members who are looking to enter the field. It looks like if you put this all together, it's saying, yes, we're hiring, and we're hiring designers, and we're hiring young designers and emerging professionals. I think there's a nice story to tell there. Finally, on the next slide, you can see that it's not easy to find the talent that firms are looking for. It's either 47% saying it's difficult, 33% saying it's very difficult, and that's, I think, our largest majority. If you put those two together, of all the different questions that we asked, talent is scarce. And as a matter of fact, we heard from a few principals of big firms recently at the ASID Think Tank Challenge, which I'll tell you more about. They are saying, they're getting salary pay increase requests from their employees. So demand is high, and salaries, I think, are likely to follow. So that concludes the main section of our report, and now we have the floor open to questions. We welcome you to type in your question on the webinar format. There's a box should be on your screen, so please feel free, if you have any questions, send them our way and we'll try to get to them. Let's see. While we look at those questions, I just wanted to that are coming in, pass it off to Jack. If you could comment a little bit here. Okay, so I'm seeing a bit of a mixed picture, right? We're saying that our firms are hiring, or they're planning to hire, And yet there's been a couple of signs of softening of the economy, right? And these are just emerging. The April numbers, you mentioned the consumer sentiment is a little bit weaker in April. We know that the Fed has elected not to raise interest rates, perhaps because they're seeing a bit more weakness than they expected. And then the US dollar is down a little bit. It's still strong overall, but it's come down off its high not that long ago. Jack, if you could comment on what you're seeing there with a couple of signs of weakening and how that might play out.
Well, it's difficult in some ways to determine exactly how weak, if the weakness is due to underlying conditions, or do we see seasonal factors influencing the release of the data. For the last, I think it was 5 out of 6 first quarters, we've seen relatively weak first quarter and then a bounce back in the second quarter. So certainly issues relating to whether it was the weather, it was the fiscal cliff, a number of factors could have also, and the Great Recession can influence the seasonally adjusted data. So what we see for GDP may be, it is a weakness overall, but also there could be some expectations that revisions could and would perhaps suggest some positive improvement. I think the overall performance of the U.S. economy still is in a forward momentum. I think aggregate demand, while it's less robust as we thought or would like to see it, I believe that it will continue. We'll get some drag going into the second quarter from the same conditions that we've had in the first quarter, and that certainly is the drag from the energy sector. As you mentioned, David, yeah, the dollar has regressed a little bit. It's not as strong as it had been. That should be a positive. It should be a positive for companies that are exporting goods and services. One of the areas that still remains a big problem is business investment. A lot of expectations for 2016 was based on non-residential fixed investment to increase, and we saw a major decline, 5.8% decline in structures and equipment for the first quarter. So firms, I think, are still maintaining, in the broad sense, some conservatism or being conservative. They're uncertain about demand, both domestically and globally, and I think that played into things, especially in the first quarter. Many firms, as you know, they begin the year, with hopes and aspirations. They put their budgets together late in the fall, and they look at sales and they look at spending and working together. They think that this will pan out. Well, a lot of it depends upon how the environment is, and we had the shakeout in January and February when oil went down to 26. Chinese devalued their currency, so it caused some panic, and it takes a while to work its way through. But overall, as we think about it, as I think about it, I think there's a gradual rebound. If we want to look at an industry in particular, which has given us some positive momentum, and that is the construction industry. The past 12 months have been very good for construction broadly, David. We've seen residential spending increasing in non-residential to a degree. Even public spending has been up. So to that extent, from the industry, the fact that we're not getting a full evenness across all sectors, but yet we're still seeing confidence in some of the spending that's going along with construction, and for that matter is related home improvement spending. I think it still gives us a fairly positive view on 2016 for the design industry at this time.
Jack, I appreciate those words of summary, because we had a question come in. What is the general mood of the industry in the past quarter, and what is the outlook? So if you could just, and maybe you're repeating here, but just a few words of summary, you would say? Sure.
The outlook is still very positive. The expectations index that we have shown in our materials show that they remain positive about the near term. The 6-month business conditions index score of 63 for March is slightly lower than the 68 of December, but it's showing consistent scores. So I'd say the outlook is relatively good. And the fact that the last quarter, we saw in the data on the very first chart that there was an upturn in the last couple of months. So I think those are very good positive developments for the outlook.
Great. And as a reminder, anything above 50 means growth. So even though there was as you were saying, it's down from 68 to 63, it's still positive growth and relatively consistent.
I would say, things are good.
Yeah,
they could be better. They're not great, but from our perspective, I think the momentum is the most important part of the discussion right here. It's positive momentum going into the second quarter and probably into the remainder of 2016.
Very good. If anybody else has any questions, please send them along. I've got one more that's come in here, and that is as follows. Will the fact that this is an election year factor into the general weakness, or historically has it not mattered?
I suppose that's for me to answer too, David?
Well, you take a stab at it, and I can comment.
Yeah, sure. Well, actually, it's been noted in recent releases, both the Consumer Sentiment and the Consumer Confidence Index both noted that the outlook from the consumer standpoint is being influenced by the election. So this is a concern. I think you can't help but understand why many of the candidates are believing that the economy is not doing so well and needs to improve. Granted, we could go faster than we are, but I think that my own observation is that we're getting headline news that's telling us things are not so good, and I think consumers are probably inching back a little bit in spending in some ways. But I wouldn't count the consumer out. They tend to be pretty resilient, and if we continue to add jobs going into the next few months, that still can be a big positive force for the overall growth in the economy and the psyche of the economy too.
Right, and as a reminder, we're getting, at least our designers are planning to hire there, so that's job creation for interior design sector anyway, is at least expected. So
yeah, we've seen in the March data, now the last report showed February design data, interior design. It's actually, excuse me, I was looking up while you were talking, David, that we're holding on. In the 37,000 jobs in the interior design, according to the BLS, and there's different ways of calculating things, but as a benchmark looking from one month to the other, I mean, jobs have been fairly steady and improving throughout 2015, and they're kind of, I don't want to say plateauing, but certainly consistent with the overall economy and what we've been talking about. The addition of jobs are consistent with sort of the outlook.
All right. Good. Yeah, I was just going to comment on the election that we've been hearing. Well, two things. We ask our designers these questions. There's some room for comment. We had I think it was in the January bonus question we asked for Outlook, and there's sort of an open text field, and I think we had a couple of people actually mention the election as reasons for especially residential designers seeing perhaps some hesitancy among their usual consumers, are holding back a bit. But I also want to mention the stock market. It was another thing that was mentioned as a reason that some consumers may be holding back, that there's been some fluctuation there. And so but at the same time, that's just, out of the maybe 90 comments that we get from our designers, there'll be a handful that talk about those things, but most have been quite positive in their remarks and saying they're expecting growth and have a positive outlook and looking to hire additional employees. Well, I think that does it for our questions now, and we want to be respectful of the time of our panelists. If there's any more, feel free to shoot them in. But and also you can always email us and I'm going to flip to the next slide here, which has our contact information for our press contact. Julie McCrary is available, so if you have any questions, please email or call the contact information on the screen. Julie will put you in touch directly with myself or Dr. Kleinhans or whichever other expert we can connect you with here at ASID. As a reminder, all participants will receive a copy of the full report, which explains all of what we've been talking about in further detail and has additional information as well. This podcast, or this press conference, I guess is what it is, has been recorded and is going to be posted on our website as well. So if you or your colleagues have missed it and not been able to join us live today, or you want to go back and revisit, you'll be able to do so. And with that, we thank you again very much for participating, and we'll look for you next quarter at the next report. Thanks again, everybody.